Is Bitcoin's bull market in trouble? Despite major corporations stacking tens of thousands of BTC, the price has dropped nearly $10,000 since the start of the year. Long-term holders are selling, ETF outflows are hitting record highs, and yet some of the biggest players are doubling down. So what's really going on? Well, in this video, I'm breaking down which companies are aggressively accumulating Bitcoin and why it matters, the surprising reason behind the recent sell-off and what it signals going forward, and whether ETF outflows are a red flag or just a temporary shakeout. Let's dive in. So, who's been accumulating Bitcoin in the first quarter of 2025? One of the most surprising names is Tether. The stablecoin giant quietly added nearly 9,000 BTC to its reserves, bringing its total Bitcoin holdings to over 90,000 BTC. Despite this massive accumulation, Tether doesn't tend to get the same media spotlight as the likes of MicroStrategy or other major institutional buyers. But at this pace, they are fast becoming one of the largest Bitcoin whales in the market. Speaking of MicroStrategy, Michael Saylor went all in again. They added a staggering 81,000 BTC in Q1 alone, spending just over $8 billion to further cement their position as the single largest corporate holder of Bitcoin. Their strategy has been clear from the start: leverage their first mover advantage, double down whenever possible, and hold for the long haul. This relentless accumulation has made MicroStrategy's Bitcoin play one of the most significant corporate bets in financial history. But they're not the only ones following the Bitcoin playbook. Other corporations are jumping on the bandwagon, inspired by Saylor's relentless strategy. Semler Scientific, a company that originally built its business around healthcare technology, has now fully pivoted onto the Bitcoin standard. They acquired over 1,100 BTC in Q1, quietly becoming a major player in the space. Their transition from a traditional tech firm to a Bitcoin-focused entity is yet another example of companies pivoting to the Bitcoin standard. Then there's Metaplanet, which stacked more than 2,200 BTC so far this year, and the results speak for themselves. Their Bitcoin strategy has turned them into Japan's best-performing stock by a massive margin. In fact, Metaplanet might just be the best-performing stock in the entire world right now, as investors are rewarding companies that position themselves aggressively into Bitcoin. So, if public companies collectively bought over 95,000 BTC, why has Bitcoin's price still fallen nearly 12%? One of the biggest reasons is that long-term holders have been selling. So far in 2025, long-term holder supply has decreased by 178,000 Bitcoin, completely offsetting all the corporate buys and adding significant sell pressure to the market. Historically, long-term holders have a knack for timing the market. When they start selling in large quantities, it often signals that the market is getting overheated. Their Bitcoin typically ends up in the hands of short-term holders, who are known for buying the tops and panic selling the bottoms. However, looking at the long-term holder 30-day net position change, we saw a massive spike in selling as Bitcoin rallied to $100,000. But that selling pressure has now dried up completely. This is an important trend to watch. Historically, whenever we see a major selling spike followed by a sharp slowdown, it has marked a local bottom before the next major rally. If we start to see large green accumulation spikes on this metric, it's often a signal we've hit a local bottom, setting the stage for the next rally. I'll be watching this one closely. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Another major factor behind Bitcoin's recent price weakness has been the outflows from the Bitcoin ETFs. Over the past quarter, nearly $5 billion has flowed out of these funds, marking the worst ETF outflow numbers since their launch last year. But before you hit the panic button, let's put this in perspective. This isn't necessarily a long-term bearish signal. Just like we see in other major ETF markets, retail investors make up the majority of the customer base. And for the most part, retail investors trade with their emotions, reacting strongly to price swings, sometimes in a self-perpetuating cycle where initial sell-offs trigger even more selling. It's also important to remember that after nearly a year of consistent ETF inflows, some sort of pullback was inevitable. No uptrend moves in a straight line. These corrections are natural and healthy, helping reset the market before the next big leg higher. It's not unique to Bitcoin either. You see this ebb and flow in ETF products across all asset classes. So, while it's a rough patch, I don't believe it's the end of the story. So, to wrap things up, despite the price drop, big players are still accumulating Bitcoin at an aggressive pace. The major corporations on the Bitcoin standard have together added over 95,000 BTC this year, showing strong institutional confidence. At the same time, long-term holders have been selling, offloading 178,000 BTC this year. This kind of sell-off usually signals an overheated market, but now that the selling has dried up, history suggests we could be near a local bottom before the next rally. Finally, there's the $5 billion in ETF outflows, the worst since launch. But retail investors tend to panic sell in downturns, and after a year of non-stop inflows, a pullback was inevitable. This is normal across all markets, and not necessarily a long-term bearish signal. If history is any guide, these shakeouts often set the stage for the next big move, so the coming weeks will be crucial to watch. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.